If you have a bad, a poor, or a less than perfect credit score, you might find it hard to get a personal loan. People with credit scores below 630 can struggle to find the loan that they need. This is the space where it can entirely depend on the company's algorithm on whether or not they approve you. Where should you turn? What's the best loan you can get? That's the question I want to answer for you today. We've spent years in the lending industry and we currently track dozens of lenders. I'm going to use that experience to lay out where you should look and what kind of personal loan you can expect to get if you have bad credit. I'm going to give you the spectrum of the lenders that might offer you a personal loan. On the far left side, we'll talk about the lenders who will give you the best APRs, but they are also going to be the least likely to approve you. As you travel across the spectrum, the options will get more expensive, but easier to get. If you have bad credit, there are two ways you can use this information. You can either start from the left and go right until you find someone who will approve you, or you can start from the right and go left until you find the best deal that you can get. The point is that this should be a full spectrum of the options for personal loans if you have bad or damaged credit. Let's get at it. The best option you could get is from a credit union. Credit unions are member-owned financial cooperatives that provide a range of banking services, including savings accounts, loans, and financial counseling. Unlike traditional banks, they operate on a not-for-profit basis, aiming to serve their members rather than maximize profits. This structure often allows credit unions to offer lower fees, better interest rates, and personalized service. Because of that, credit unions can offer some of the lowest interest rates for personal loans. They can also approve people who banks might not. But because they are focused on their members, if you have damaged credit and don't already have a relationship with them, you are very unlikely to get a loan from a credit union. If you receive your direct deposits into a credit union account, they are much more likely to extend you credit. That being said, I have spoken with credit union executives who think that the only reason that payday lenders exist is because people don't know that credit unions exist. They were surprised when I told them that people are regularly denied for credit from their credit union. So if you have an existing relationship with a credit union, you should definitely start with them. They are going to be the best option for you. Some of the national credit unions that offer personal loans include Navy Federal Credit Union and PenFed Credit Union. Banks are the next best option for you. Banks are for-profit organizations, so they are all about making money, but their rates tend to be lower because they are very closely regulated. That means they are much more cautious about what kinds of interest rates they are charging. Like credit unions, they are unlikely to give you a personal loan if you have poor credit unless you have an existing relationship with them. Even then, the chances might be slim. U.S. Bank is one of the only banks that offer microloans to its members. So if you are a U.S. Bank customer and need less than $1,000, U.S. Bank is probably your best option. You always want to check with your bank to see if they will lend you the money that you need, because they may be the best option available to you. The next category is finance companies. These are entities that are focused on lending. Some of them have grown and expanded into other things like banking and credit cards. These companies lend more broadly than banks or credit unions. These lenders have APRs that max out below 36%. Some of these companies will lend to people that have credit scores below 630. But they don't focus only on your credit score when deciding whether to approve you and for how much to offer. So if you have a recent credit history that is trending in the right direction, they could approve you. Some of the lenders who specifically say they are willing to lend to people with credit scores in the low 600s include Achieve, Avant, Best Egg, Lending Club, Prosper, Upgrade, and Upstart. The next category is storefront lenders. These are companies that have offices around the country, but you can also borrow on their website. These lenders often keep their APRs below 36%, but they often have other costs that could make the loans much more expensive. Some of them push you to buy their insurance, like employment or credit insurance that covers your payments if you lose your job. The cost of the insurance doesn't need to be disclosed in the APR, so the overall cost of borrowing can be obscured. They can also push you to secure the loan with the title of your motor vehicle. Some of these lenders might even have a reputation to make it harder to pay the loans off early. They are more willing to accept people with less than perfect credit, but the trade-off is that you might end up working with a company with uncertain policies or more costs than you expected. Some of the more prominent brands in this category include Mariner Finance, One Main Financial, Regional Finance, and World Acceptance. This next group of lenders is much more dialed in on their policies. These are all online companies that cater to people with less than perfect credit. Their policies are often very clear, and many of them do not even charge late fees or origination fees. Mostly, these companies do not offer secured loans, and they are much more willing to approve people. Of course, their APRs can get expensive. These loans have interest rates that range from 60% up to 180%. For that reason, if you absolutely have to take one of these loans, it should only be for a very short period. If you can, avoid keeping one of these loans for more than 12 months. Some of these brands that we have reviewed in the past that fall into this category include 60-month loans, FIG loans, MoneyKey, NetCredit, Rise, Opportune, and Op loans. This next group of lenders have traditionally called themselves payday lenders. A payday loan is a loan that is repaid with fees within 14 days. Essentially, it's a loan that's supposed to get you to your next payday and is due on your payday. These lenders start out in the stores, usually in strip malls. Some of the bigger brands now offer loans online as well. But there are a lot of different payday lenders out there. A few years ago, someone made the assertion that there were more payday loan stores in the US than there were McDonald's. I'm not sure that was ever really true, but the point is that there are a lot of payday stores out there. Each state seems to have their own brands, with only a few brands having semi-national presences. The bigger payday lenders might offer a range of products like installment loans, title loans, check cashing services, and money transfer services. These companies are regulated by the state, so the terms are often different state by state. Just about anyone can qualify for one of these loans. Payday loans are smaller loans with short terms and are very expensive. These loans usually have APRs that range from $200 to $700, and they're usually calculated in terms of a fee. So they'll charge you $15 for every $100 you borrow. Even if one of these companies also offers to give you an installment loan that you can pay off over time, you never, ever want to hold one of these loans for more than just a few weeks. The fees and interest alone could get out of hand very quickly. Some of the bigger brands in this space include Ace Cash Express, Advance America, and CashNet USA. The last group of lenders is really similar to payday lenders, but they are a bit different. These are tribal lenders. These brands lend under the rights of Native American tribes. Because these tribes claim sovereignty, they assert that they do not need to adhere to any state or federal regulations. It's roughly the same principle that has allowed tribes to set up casinos in states that have laws against gambling. These lenders are always online and they are very expensive. The APRs are comparable to payday loans, 300% to 600%, and they are often not terribly clear because they don't need to adhere to any disclosure rules. Because of how expensive they are, if you really feel like you need to take one of these loans, you don't want to hold it for very long. And if you do, you will end up paying more in interest than you borrowed. There are a lot of tribal brands out there. Here is a little logo salad of some of the ones we track. If you had perfect credit, you wouldn't have to wonder who would lend you money. Almost anyone would. If you have less than perfect credit, it can feel like you have limited options when you really need to borrow money. And that uncertainty is real. For that reason, you need to shop around and make sure that you're getting the best deal that you can possibly get. At the Yukon Project, we've tried to make shopping around easy. If you go to our marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers so you can feel confident that you're getting the best deal that you can in your circumstances. If you have ideas for other places people should look for a personal loan, please leave a comment below. We appreciate the comments, especially when they are helpful. We are trying to build a community of people at the Yukon Project that can help each other out with their experience. We all just want to live our best financial lives. And please like this video and subscribe to our channel. It helps us out and we really appreciate it. Thanks for watching.